Good morning and welcome to IG's early morning call. It's Thursday, the 9th of November. Let's take a look at the headlines as we wait the start of today's European session, looking for losses pretty much across the board. Coming up, we'll be taking a look at what's happening in terms of some of the deflationary pressures now coming through in the Chinese economy. And we are experiencing some CPI data coming in weaker than expected, it contracting in the month of November. Meanwhile, Bob Iger, the chief executive of Disney, is building the business again. According to the statement last night, we saw the stock up 2% all sessions in the IG platform. And meanwhile, we're taking a look at a drop for many of the commodities markets on the session in today's trade. We are witnessing a drop at a 3-week low for the price of gold after a slew of Federal Reserve comments around the fact that interest rates certainly going to remain higher for longer. Chances are we could well see more interest rate rises unless inflation abates. The one thing today is the fact that we've got a lower print for what's happening in terms of oil, which is one of those inflationary inputs that the markets continue to monitor. Let's take a look at what's happening with the volatility chart, because we see a continuation of the move lower, currently trading at 1583. Big declines over the last 8-9 days or so, indicating that people are more willing to take on risk assets. We're looking for gains, a loss at the moment on the London markets. You can see here a green candle, which indicates that there is the impetus of a move up. But that being said, we're still lower than we were as at the close of the cash session last night in the London markets. German markets, just show you what's going on there as well. In fact, we're looking for a slightly lower start to the trading day today, despite the fact that the 24-hour markets we're pushing higher for a third day in a row. That being said, we're not as high as we were intraday yesterday, where we've seen this market as of yesterday's high point, the highest trade we had since the 17th of October. Let's move on and take a look at what's been happening overnight in the Asia-Pacific markets as we see a mixed session overall. Where we're seeing some pressure in some markets, especially in Hong Kong, where we're seeing that market move along with the concerns about deflation in China. Let's look at what's been happening on the Wall Street close as of last night. And it was a trading day where we've seen a mixed picture overall. The Dow Jones Industrial Average as of the close yesterday on the way down. Outside of that, we saw gains in the S&P and gains as well for the Nasdaq, up 0.75% at the close. So we saw these growth companies benefiting from some of the Federal Reserve comments. What I want to do is to move straight on and take a look in some more detail about what's been happening in some of the other areas of the market, because as of the end of yesterday's session, as we saw these currency markets move. Let's move to take a look at what's been going on with the Chinese CPI numbers, swinging back into contraction in the month of October. The consumer price index dropping 0.2% from this time last year, a faster drop than the 0.1% fall expected, confirming that China's battle with disinflationary forces is far from over. Now, consumer prices slipping into deflation in the month of July and returning to positive in August, but were flat in the month of September. The Chinese government's inflation target is still set around about 3%. Factory gate deflation persisted in October for the 13th straight month, the producer price index falling 2.6% year on year against a 2.5% drop in September. Economists had predicted a 2.7% fall. I want to take a look at what's happening with this chart here. This is the dollar against the Chinese yuan, the CNH, which is the offshore yuan. And we got the dollar up for a second day in a row. In other words, a weaker Chinese currency. Later today, we get US initial jobless claims in the States at 1:30 p.m. today, UK time. Angelina will be catching up with this and beat the street. Economists forecasting 218,000 new claimants last week and a previous reading of 217. A look at what's happening on the foreign exchange markets. You can see that at the moment, at least, we got the euro dollar flatlining at 107.06. One of the areas of the market I do want to highlight is this continuation, the push higher that we've seen for the euro against that weaker Japanese yen. Now we see more evidence to suggest that the European Central Bank has many members on its board, its voting committee, suggesting that interest rates just aren't high enough. They're not high enough for the concern that many still have about the inflationary outlook. Now, let's take a look at some of the stocks to watch in today's session. I want to begin, first of all, here in the UK with AstraZeneca. It's come into the news headlines for all the wrong reasons recently about people wanting to take litigation against AstraZeneca about its COVID vaccine. But it's raised its core annual profit outlook, the drug maker benefiting by strong demand for its oncology treatments and rare blood disorder drugs. Let's take a look at what we saw in terms of the numbers. EPS up 4% to $1.73. Total revenue coming in at $11.49 billion in the third quarter compared to $10.98 billion this time last year. The London-listed company now expects core earnings per share to increase by a low double-digit to low teens percentage for the year, compared with an earlier forecast of high single-digit to low double-digit percentage growth. So let's look at the share price chart. It's been bumping along pretty much the bottom recently. I say the bottom if you draw what's happening in terms of the lines to watch out for. Just to put a horizontal base there, which is at £10 and 100.21. And we've not been too far away from that recently. We're opening at 102.23. I quite like the look and shape of these numbers out this morning. The bottom line is we've got better revenues and better earnings. And I think if you continue to monitor this as an opportunity, if you were to go long on this, your stop goes below this line down here at below the 100 level. 102.23 is where we're opening for AstraZeneca at the top of the hour. Another stock to watch is WH Smith. We've been talking about this in the context of a rise in the use of airports, particularly. Adjusted pre-tax profit, £143 million. Revenue, 1.79 billion. And the final dividend, almost 21 pence a share. Now, WH Smith has been dwindling recently. The share price doesn't really represent this is a business which is worth following. But that being said, these figures out today show that the company's been doing all the right things, expanding its exposure to the travel centres, particularly some of these larger areas where we've got airport hubs particularly, and big train concourses as people get back into travelling. Year over year, we still do see more people using commercial, and public transport, which is helping the likes of WH Smith. Watch out for Airbus shares at the start of today's trade. The European aeroplane maker, the group has released its third quarter earnings. It did so late last night after the bell in the European markets. Net income rising by 21% to 806 million euros. Revenues increasing 12% to 14.9 billion, mainly reflecting the higher deliveries of commercial aircraft. Let's take a look at what's been happening with the share price. There's not been much move from recent highs. We're opening this morning at 130.04. Airbus said it would increase the production rate for the A350 to 10 aircraft a month in 2026 and continue to target a rate of 4 for the A330 in 2024. The company said it expects to achieve around 720 commercial aircraft deliveries in 2023. Another company worth watching this morning is another business having reported earnings in the German markets. We've got Deutsche Telekom very much in the frame. Net profit rising 21.9% to 1.9 billion. These are the full year forecast the third time this year on the back of solid earnings for Q3. Net revenue increasing by a margin of 0.7%. Deutsche Bank wants to increase dividends to 77 € per share and a planned share buyback of up to 2 billion euros. Another stock to watch, I think possibly favourably at the start of today's trade, 21.31. This is where the stock will open this morning, not too far away from recent highs. And if we see it tip over the highs that we saw back on the 1st of November, you'd be then looking at levels not seen since the 24th of May this year. After the close of Wall Street on the Wednesday session this week, we saw Disney exceed Wall Street estimates for earnings and revenues, sending the shares higher in extended trade. Let's take a look at the numbers. Earnings coming in at 82 cents a share, 30 cents compared to recorded what was seen this time last year, 11 cents higher than analyst forecasts. Revenue, however, narrowly missed estimates. Disney had nearly 7 million Disney Plus streaming subscribers at the quarter end. Disney Plus and Disney Plus Hotstar together boasting 150.2 million subscribers ahead of an estimated 147.4 million. I want to show you the share price chart for Walt Disney. It traded all sessions on the platform last night, and you can see it pushed higher, closing at levels not seen there. since the 15th of August. Disney's entertainment unit, which regroups television networks, film studios, and its Disney Plus and Hulu services, posted operating profit of $236 million compared with losses of over $600 million this time last year. One other bit of good news, which isn't on this chart at the moment, and that bit of good news was out overnight, where we are expecting to potentially see a stronger open at the beginning of today's session. Let's get back to the chart because I want to show you what's going on with the release at 9 o'clock this morning of all session stock trading in the UK. This could well see another lift on the news overnight that's reported by the LA Times that there is this move by the Actors Union to agree some sort of deal with the Hollywood studios, which includes Disney, to go back to work and start moving positively again. Now, following the set of results, Bob Iger highlighted the significant progress made since he came back to the helm of the group, adding, while we still have work to do, these efforts have allowed us to move beyond this period of fixing and begin building our business again. Disney now says it's on track to achieve $7.5 billion in annualized savings as it aggressively manages costs. The company plans to reinstate a dividend payment to shareholders by the end of 2023. Another stock worth watching was Lyft late last night, the ride-hail company. It dropped on the all sessions trading on the IG platform late last night, sending a stock lower. The group posted a net loss of 3 cents a share to be compared with expectations of a profit of 15 cents. Revenue was marginally higher than forecast at 1.16 billion. Gross bookings rising 15% to 3.55 billion. Now, Lyft shares have been under a lot of pressure since the highs that we had. Look at this blue line up here. This blue dotted line was the IPO price at $72 at the beginning of its life as a listed company back in April 2019, and were a shadow of the former self down at 10.56, and it extended trade last night. We saw it drop despite the fact this is a green candle. What happened last night was the stock gapped lower and then rose into the end of the session, but in fact ended down on the trading day by a margin of 2.86%. Let me just stay on the charts, just quickly follow up a couple of other areas of the market. We've got gold down at 3-week lows, and we are holding on the 200-day moving average at the moment on this chart. And Brent crude, yesterday we saw another day of declines following on from the hefty drop that we saw on Tuesday. We have got a little bit of buying interest at the moment, but concerns about the outlook for the global economy continuing to dog the market for oil. That's it from me. Back at 10:30 with Charting the Markets. Do watch out for those likes of AstraZeneca, Deutsche Telekom and WH Smith start the day's trade after having reported earnings that look a bit better than had been expected.